More top stock picks to share with you now. Kevin Cook, you're going to lead things off. You have a Chinese technology company.
Yes, Chinese internet. And those two words alone should make you think aggressive growth stock, Chinese and internet. This is a Qihoo. Boy, if I can get that right.
Qihoo, you said.
Qihoo, yes, 360.
Okay.
They started out in security, PC-based and mobile. They ended up giving those products away because what they really want to do is get the search, gaming, ads. And they're taking share from Baidu. You know, Baidu is the 800-pound gorilla in the Chinese internet market. With 90% of searches are done through Baidu. So Qihoo is gaining share. They just had a blowout earnings report in August. You look at their last 4 earnings surprises, double digits, triple digits for the last 4, wow. 100% earnings beats. And the street's really excited. You look at the price chart, the thing is hyperbolic. It's gone straight up this year. A little bit scary to take a position here, but when I read more of the research, I looked at it. I've looked at it from J.P. Morgan and Stifel Nicolaus and a lot of other firms. They think this company is a real solid growth story. And just like Baidu is for real, may have found its home at around $120, now back up to $135. This $7 billion company has a chance to keep gaining share. And you're talking about the largest internet market in the world, right? Right now they've got 95% of the Chinese internet market using their security products, whether it's PC or mobile. So they have access to all these eyeballs and fingers on the touchscreen, and they're monetizing them slowly with ads, with search, with gaming. They just launched a new mobile video search. Now, I don't know if you've ever tried to search for video on your phone, but there's some limitations there, right? Supposedly this is going to be a breakthrough product for them. And you're looking at estimates around $1.65 for next year. J.P. Morgan's at $2. So you're still looking at paying 40 times for this company on next year's earnings, but that's how they justify the price targets of $95 to $100. I would say, if you're nimble and you want to take a shot at trading this, you want to buy in the low 80s and play it that way. But it is a long-term growth story for China Internet.
Okay. Eric, you have an ETF.
Yeah, I'm looking at IEO. It's an iShares oil and gas exploration ETF. And I'm looking at this one thanks to high oil prices, Middle East tensions, and the domestic focus of all these names in here. Plus, you got oil exploration and oil integrated. Both these segments have top 25% Zacks industry ranks. So you get great estimate revisions going behind both these sectors. You get a large cap focus, so it's going to be a relatively safe play. And the ETF has a Zacks ETF rank of 2 or buy. So we've got a pretty great trend going here. It's kind of near its high recently, but I think the trend could continue here, especially if tensions pick up in the Middle East and oil remains firm, and investors start to look more domestically for oil production, and we still see more demand for exploration services and the like. So I think this could be a nice short-term play, especially if tensions continue to rise.
All right, Shiraz, food company.
Yes, Hain Celestial. It's a stock that plays on a trend that I have spotlighted in the past. Healthful, organic food, branded. Hain is the maker and distributor, one of the largest in that space. The target market for those products tend to be a little bit affluent than the general category, and that consumer market has held up really nicely. The overall secular trend for eating more healthful. I know Kevin is onto that trend.
I shop at Whole Foods. I don't know if I'm healthy, but
so it's a growth company, very strong growth in the double digits, both on the top line and the bottom line. Mid to high single digits organically, and then a very opportunistic acquisition strategy to plug individual brands in their product portfolio. So it's about $3.5 to $4 billion market cap, a bit on the pricey side relative to retail food, but given the growth that they have achieved and the outlook for growth, I think it's a pretty interesting pick.
Yeah, and they've confirmed it with the past couple of quarters have been strong for them.
Absolutely,
Yeah.
they just came out with a positive surprise for quality results, guided higher as well. Estimates have been steadily going up for them as well. So overall, a very strong growth company.
All right, thank you all for that. Don't forget to check out other stock picks on our website, Zacks.com. If you're not there already watching this video, get on over. They change often, so check back often. With everyone here, I'm Terry Ruffalo.